Thanks for tuning into Insight. I'm your host, Neeraj Shah, and it's an episode where we're talking about a space that has recently started catching the investors' fancy after a very long hiatus. And I'm talking about healthcare. But within healthcare, as our recent shows have shown, there are a bunch of segments and a bunch of sub-segments. Now, within one of those sub-segments, we've managed to get an investor or an expert today who is going to talk to us about why a particular sub-segment within the whole healthcare space seems very interesting to him from a medium to a long-term perspective. He goes by various Twitter handles. The most famous one is Unseen Value. And our guest today is Sajal Kapoor. He's got multiple years of experience and he's a risk and compliance professional with keen interests in the CDMO space. Sajal, I hope I got all of that right. Thank you so much for joining in on Insight.
Thank you, Neeraj. Yeah, thanks for having me. It's a pleasure and an honor to be on BQ Prime, which is one of my favorite channels.
Thank you so much. Thank you. Appreciate it. Now, Sajal, let's get this underway. I would love to understand from you, why is it that you believe, and please correct me if I'm wrong, if you don't believe so, but why is it that you believe that CDMO is a multi-year opportunity for investors to make money if invested well?
Sure, Neeraj. So I go by the data. Before I delve deeper into CDMO, let me clarify that there are two branches within CDMO. There is a generic CDMO, which most Indian companies are doing. And then there is a NCE or the novel synthesis side of the CDMO, which very few companies in India are doing. And the reason for my bullishness is the data that I have seen is starting as early as 2016. In some cases, maybe a couple of years earlier than that. And Indian players are gaining market share. So the market for this novel synthesis space is growing roughly about 10%. Indian players are growing much, much faster. So with full disclaimer, again, none of this is recommendation that we'll be talking about, stocks in general. So I've got vested interest and I'm not a registered investment advisor. So don't take this purely an opinion, but it's based on the data. And significantly better growth than some of the European players as well, and market in general. So that kind of gives me a lot of bullishness. The other data that I have seen is that what was happening in the IT. So my background is in IT. And around mid-90s, when IT boom just started happening, there was a lot of unrelated diversification back then. Now we know that it was the right move by some of the corporates. So Wipro wasn't an IT services company to begin with. They saw the opportunity and they jumped in. But Wipro wasn't the only one. L&T, they were not in the IT services space. They started somewhere around 95. And then ITC also joined around 2000. I see a similar trend in CDMO space. If you look at what Murugappa Group has announced recently, if you see what Nirma Group has announced recently, so there is a pattern, and history never repeats, as they say, but often it rhymes. Maybe it may rhyme again this time around. But generic CDMO is not the space that I am bullish on, because pricing pressure will be there. Is the NCE NB CDMO space where I'm very positive.
Okay, just one quick question before we get our corporate guest on the show, Sajal. And that is this specialized CDMO, if I can use that term. Is this an opportunity which can be structural and multi-year in nature? Or is it, even if it's multi-year, it could be cyclical, because there could be, let's say, a lot of conditions that companies have to fulfill, which, per se, at various points of time, they might not be able to live up to, and therefore there could be fluctuations. How is this opportunity?
Not so much on the cyclicality, but there are extremely high entry barriers in this. So that's the reason I say not everyone would be successful in this space. There's a very long gestation in the drug discovery life. So all these players are supporting the drug discovery life cycle, which is a 10-year gestation journey. You need a lot of capex and opex upfront. So not many players would be able to do that on the biologics as well as the small molecule side. And you need to win the trust and the commitment from both ends, right? So the innovators would find it extremely difficult to find 20 companies who could do that at scale with the right sort of capability, compliance, so on and so forth. So I don't think there is any cyclicality. See, the molecule will very few molecules will go commercial. It's only when the molecule reaches phase 3, the percentage rate is about 57% for success after phase 3, not before. Phase 2 is the most notorious. It's only after you get the molecule in phase 3 and beyond, then you get a long predictable runway of cash flows. And then at some point in time, that molecule will go off patent. So there will be a time that every molecule will go generic, and then there could be the life cycle management or the generic CDMO opportunity that will start unfolding in that molecule. But because if I give you one example, there are more than 650 novel APIs in phase 3 alone. And 60% of these, 55 to 60% of these should get converted. Where will you manufacture them? You need a rare combo of compliance, capability, cost, both the low capex and low opex. So there are very few jurisdictions. Most of them are in Asia. So you look at China, Korea, India, that kind of spaces, where you get the perfect combination or the Lollapalooza of everything.
Okay. And maybe Sajal, after let's get in Dr. Satyanarayan Chava on this conversation now. And after we do ask him our questions, I would love to get a synopsis from you about what you thought of it and whether Laurus fits that bill or no. But let's get him in on the conversation. Dr. Chava, great having you. Thank you for joining in. And just before you joined, Dr. Chava, we were asking our investment expert today, Mr. Sajal Kapoor, about what he likes about the space that you might be in and maybe about you as a company. And if I'm not wrong, he talks about very highly about the CDMO capabilities of Laurus Labs. So I would love to just kickstart this conversation, Dr. Chava, and then I'll get in Sajal to ask you questions as well about whether you see a bit of a metamorphosis in Laurus's case as a CDMO company, because for long you've tried for the last at least 12 quarters to tell everybody that we are not an API company. I think you've successfully established that. My question is, do you see yourself as a CDMO company as a principal one, or is that not the base case?
The one line description of Laurus Labs, Neeraj and Sajal, is we are a research-driven manufacturing company. Why I say we are a research-driven manufacturing company? About 20% of our colleagues works in R&D. We have about 6,000 colleagues, more than 1,200 people work in R&D. What are the areas of R&D where we work? We work from starting materials, we work intermediates, we work APIs, we work in formulations, we work in animal health, we are working in agro space, we are also working in biocatalysis, we are also working in alternate food proteins, we are working in dietary supplements. So all these are well diversified. So we are transforming our company into well-diversified manufacturing company. I've used that word again, very diversified research-driven manufacturing. We used to be a one-product company, as you're aware. People used to ask about FAO range. Is Laurus a one-product company? It's not the case anymore. Is Laurus a one-therapy company? People still attach antiretrovirals to Laurus Labs right now. It's very obvious. But we are moving away from that without compromising on the value of ARVs. We respect the ARV segment because that is the one which helps us to build the organization. We don't want to compromise on the value proposition of antiretrovirals, both APIs and formulations. But the revenues from other divisions are coming much more than what everybody is expecting. We are planning that. But for an outsider, the kind of transformation, I will use word transformation as a metamorphosis. So the kind of transformation we are doing is remarkable. I'm very happy the way we are doing. Any transformation needs a lot of time. For example, at the time of IPO, we said we are investing heavily into formulations. Until we generated significant revenue from formulations, nobody gave any value for us. And so we invested 700-800 crores. We invested 300 crores before we started revenue. So all those investments we did to enter into formulations. Now, our NCE CDMO, I will talk our CDMO in multiple fronts, not just CDMO as a CDMO. Our NCE CDMO we're focusing from 2014. We didn't get right opportunity. We didn't get right customer profile. We didn't get right to climate. It is also very obvious from customer front. We don't want to blame them. We are a end company. When we are pitching for CDMO business, we are not very profitable also. So they don't want to give their billion-dollar assets. For them, they're buying maybe $50 million API, but that asset is valuable maybe a few $1 billion. So they think, why you have to put this asset with an end company with one facility? So now we have multiple facilities, multiple regulatory inspections done without any challenges. We have great technology platforms created now. So currently 50% of our revenue comes from CDMO for NCE programs, CDMO for animal health, CDMO for agro, and CMO for generic companies. I'm dividing the CDMO plus CMO, but if we combine those two, about 50% of revenue comes from contract manufacturing, whether it is given by a partner in generic industry or given by a big pharma in clinical programs or animal health or life. So we have well diversified our revenue base. We have well diversified our customer base as well.
Sajan?
Yeah, sure. So first of all, it's an absolute honor and a privilege to be interacting with yourself, Dr. Satya. You mentioned about transformation. My question is, research in general and drug discovery life cycle in particular is full of uncertainties. Most molecules that are currently in the pipeline, so more specifically about phase 1 and phase 2, they will fail to go commercial. It's only after the molecule enters phase 3, the probability that it will go commercial improves, and it improves significantly. So my question to you, Dr. Satya, is how can leadership and management help our scientists navigate through these, bouts of uncertainty-induced self-doubt, anxiety, stress, because people are our biggest asset. We are a research-driven business. You mentioned that we have got 1,200 research associates, and there will be a lot of uncertainty in this whole journey of research and drug discovery that we are doing within the CDMO space. So how can leadership help, control this uncertainty and control the emotions around that?
Most of our research team working on process development. We are a development. See, in our R&D, our R is small, D is big. Small R, big D. So our focus is more on improving the processes, making it more efficient, more green, clean, and also safer. That is our main focus. We also do research now, new routes for existing molecules, new routes for clinical programs. We do that. But our efforts in drug discovery is zero. We were not a discovery company. Still, our scientists go through the same ups and downs, because when they're working on a phase 2 molecule, all of a sudden our partner comes and says, no, thank you, this program is dead. We don't need any of the material any further. But that is a big challenge for our sponsor. The sponsor will go through a very humongous challenges when their clinical programs see a bad end. But as a manufacturing partner, we go through the same emotional bouts, but to lesser extent than our sponsor. At the same time, they have 5 programs, let's say, and 2 fail and 3 succeed. But in our case, we have multiple partners. I'm sure some of the programs what we are working will not see light at the end of the tunnel. They will also die. And that's the beauty of, I would say the word beauty of the industry, drug discovery industry. Otherwise, there will be, if it is very predictable, phase 1 molecule goes to commercial, I think we will have 100 molecules launched every month.
Absolutely.
And each molecule will get to $100 million revenue at peak. So that is not interesting. That game will not be interesting if phase 1 all phase 1 goes to commercial. We don't know how artificial intelligence and these well, the predictability is improving. Certainly, it is improving. When people feel the molecule is in phase 3, the success rates are much higher than a decade ago. So that's the kind of predictability. If you look at most of the clinical programs right now are oncology, rare diseases, where the success rates are higher. If you look at CNS, diabetes, cardiovascular, these are the challenges. If you look at how many new cardiovascular drugs came into the market, how many new CNS drugs came into the market. So drug discovery companies are also focusing more on the programs where the success is higher than the other diseases. So they are also trying to invest in the areas where the chances of success is higher.
Absolutely, absolutely.
Okay. Sajal, sorry, before you ask the next question, so Dr. Chava, just wondering, you mentioned that there is uncertainty, but because you have multiple partners, there might be a difference in your case. Is that what you were trying to say? And can you explain that point, please?
Yeah, there is what will happen if we invest on a phase 2 molecule based on customer, not a commitment, customer's indication that we need X kilos in phase 3, and we build a facility that program is not successful. What will happen to the investor? That is the biggest challenge for a company like us. But at the same time, no CDMO partner is willing to give molecules if they see vacant capacity. If they don't see vacant capacity, factory is running full, and we also take the same bet. I will build capacity only for 25% of my programs, hoping only 25% will succeed. Then what will happen when customers are not willing to give or put their projects into a very crowded environment? If their molecule, they want 10 tons, but their business development guys need 20 tons. They don't want to put another vendor during the commercial phase. The biggest challenge the commercial guys face is when BD wants more material, the supply chain guys cannot be. The supply chain also willing to put their molecules in a company where they see willingness to invest or already capacity is available. I think if there is capacity available, the chances of you winning the projects is much brighter than you say, give me project, I will build capacity. Those days are gone.
Got it. Okay. Thanks for that.
Sajal? Yeah, I do have one point as well, Dr. Satya. So I recently interacted with a lot of scientists here in Eurozone as well as in the US. And I asked them a point blank question, and some of them were working for pharmaceutical companies, not the CDMO. And I said, which side is more greener? Would you be working for a CDMO company or pharmaceutical? And all of them in different ways suggested that there is more excitement working for a CDMO player rather than directly with a pharmaceutical company, whether big or small. And the reason that they suggested was that there is more excitement and variety working for a CDMO because you jump from projects to projects. And I think you also alluded to the fact that you have got multiple, so it's a well-diversified portfolio of molecules across different partners and different therapeutic areas. And I think that's what the scientists also enjoy, rather than just having relationship with one specific company and spending years within that. Do you agree, or have you got a different opinion, because you have got a lot of scientists and you have got a lot of industry experience as well?
It's two sides of the coin. The reason is, in generic industry, you have a benchmark. So somebody is selling a generic API at $200 a kilo. That means you cannot sell at $225 a kilo. Probably you need to establish a process to 175. Then you get market share. And the third guy who is better than us can improve process in such a way and he is willing to get 150. The business will go there. Tomorrow, after 5 years, there is a new guy who has a better technology, better scale, or more hungry for business, can offer at 125. So this is always a race in generic industry. The benchmark always is a moving target. It's not a fixed target. That's the biggest challenge. So scientist doesn't want to work on a moving targets. That is one reason. And second, in the brand company NCE program, CDMO, it is very interesting. The reason targets are not moving. They say, okay, I need this many kilos, this many price. Because the brand companies, when they launch after the clinical programs, they don't have pricing pressure. Their volumes go up. There is no pricing pressure. So what they want is a sustainable partner. And there are new chemistries. So if you are working in generic industry, your chemistry challenges are minimal. The cost targets are very Herculean, but the chemistry challenges are minimal. New technology platforms and all. If you look at generic industry 10, 15 years back, nobody is interested to invest in continuous flow technology. Nobody is interested in biocatalysis. Now, you take any chemical process from big pharma or any discovery molecules, at least there is one continuous flow reaction. At least there is one biocatalysis. If you're working in generic industry, the chances you get to work on exciting chemistries is less. But the CDMO is always exciting. You use organometallic chemistry, you use ultra low temperatures, you use ultra high pressure reactions, organometallics, biocatalysis, continuous flow. There is ever changing. So people love, the people who love science, they love CDMO.
Yeah. Thank you. And the other question that I have, Dr. Satya, for you is that what I see. So what happened in the IT space about 2 to 3 decades back? The companies that were not, so Infosys started as an IT company, but there were others like Wipro, L&T, ITC. Their core business was not into IT services, but they saw the opportunity and they jumped and they started significant capex and investments in IT services. And this was 2-3 decades back. I see a very similar trend emerging in the CDMO space. Perhaps I'm wrong, it's too early to conclude anything. But recent announcements from Murugappa Group, and I know they are very conservative and ethical group, the Murugappas. So they have announced aspirations for CDMO space. Then last week or the week before, Nirma Group also announced CDMO space, and Nirma is one group that understands pharmaceuticals because they've got this Pharma Institute. So it's not someone off the street starting a CDMO venture. It's the management who understand. And is there a correlation? I mean, is there a possibility that CDMO, the novel synthesis side of CDMO, at least if not the generic, can there be a sustainable long runway of at least a decade, if not more, in your view?
See, we need strong IT, we need strong manufacturing sector. Some of my comments which I make are not any disrespect to any other industries. We need both service industry, we need product industry. But the investments into manufacturing, we're only seeing right now. Who said I will invest 2,000 crores in capex? Nobody said.
Yeah.
Now it is starting. At least that is a good thing. And second, the gestation period required for an IT company and a pharma company are different. And capex requirements for pharma company and IT company are different. Today, if I have to start a new manufacturing, I take a land, build a factory, build some, qualify the equipment, validate the process, and give material, and they get approval. It is between 3 to 5 years. So the good thing is big guys are coming into industry is good. The reason is they have the ability to withstand this. Suppose somebody who has 100 crores, they want to come CDMO, put 100 crores manufacturing, and they cannot wait 5 years. So big guys coming is always good for this industry. The reputation will go up, country's reputation will go up. And second, the service industry, the revenue per employee is different, manufacturing revenue per employee is different. In IT industry, the revenue per employee varies from $30,000 to $50,000, $30,000 to $60,000. It is very successful. Whereas in pharma industry, it varies from 50 to $150,000. Because maybe pharma industry needs 2x capex than IT industry. They need more margins, more revenue per employee. So we need both. We need both. But it's very heartening to see people are willing to invest in manufacturing. Earlier, people consider manufacturing as risky investments in India. Now that perception is changing. Perception is changing for better. So unless there is a risk, there is no reward. If you want to have a low risk industry, your margins are also on the lower side. But people are willing to bet on the CDMO because CDMO space is growing. We haven't seen the growth. In my opinion, the CDMO space in Indian industry is at a very nascent phase. We haven't seen growth. People say $300, $400, $500 million revenue, but that's nothing when you look at the overall CDMO market. When I'm saying CDMO, not just pharma.
Absolutely.
There are many other. There are specialty chemicals. There are electronic chemicals. There are animal health. The agrochemical space is even much broader. Nutraceutical space is much broader. So if you combine that CDMO, opportunity is enormous. So 10 companies in India cannot deliver if there is a boom in CDMO industry. That's the way I wanted to put this. So we need more players. The more players are welcome so that country's reputation will go up. Here.
No, absolutely. And thank you for that detailed response, Dr. Satya. Just one clarification or point to add for viewers, Neeraj, more than anything. There is one difference between IT side of CDMO and the life sciences side of CDMO. In pharmaceutical, including animal, there is US FDA. There is very strict regulation. That was not the case with IT.
Yeah.
So you have to be mindful of that. I'll pass it over to you, Neeraj. I've got more questions, but I'm sure you.
Yeah. So I mean, just one question from my end on this to Dr. Chava. And Dr. Chava, that question is that there are times when there is a bright spot in the offing, and companies who see an opportunity pounce in order to make hay while the sun is shining. And in certain cases, like the case, for example, in IT services, wherein companies invested or companies started off the businesses believing that there was a very long runway. Now, I heard you in your answer say that the opportunity is immense for all forms of CDMO to come in and make good business. The question, and some leaf from Sajal's first question, was that, do you see this as a decade-long opportunity at the very least, or maybe even longer? What's the timeline that you see for this? I know the size is great, and therefore the timeline should largely be long, but I would still want to understand from you, how long a timeline do you see for growth for CDMO players by and large, and for you?
The supply chain is also ever transforming. It's not that these companies will change their supply chain every 2 years. They will not do that. They will build their supply chain so robust, and they want to build partnerships. So if they have 10 vendors, in 4 years, they will not have 20 vendors. They will have same 10 vendors. So maybe currently where the boom is for pharma CDMO, maybe 2 years down the line, boom for specialty chemicals. Maybe 2 years down the line, maybe boom for some other CDMO, dietary supplements or cosmetic. So you look at cosmetic ingredients, India is not making much of the cosmetic ingredients. Maybe all these things will have their own time horizons. So some of them approval times are smaller. Maybe cosmetics, you can do much easy market access. You'll have animal health, maybe a little bit in between the pharma and the cosmetic dietary supplement space. In agrochemicals, it is even much shorter time frame to get into agrochemicals. So I think every segment has its own timeline, time chart, I would say. So I would say this, maybe in the next couple of years, I would say the opportunity will peak. And then I'm not saying there are no opportunities beyond that. The supply chain, key supply chain will be frozen. Partners will be frozen in the next couple of years. And that's my view. It's not that they will keep open, adding one supplier every 6 months.
Okay. And then therefore, sorry, Sajal, before you ask the next question, just one clarity because I didn't get it. So Dr. Chava, you believe that once all of that is done, and I'm guessing that's an ever evolving process, but the opportunity size for that is a multi-decade one. Is that
Yes,
what you're trying to say?
absolutely,
Okay,
absolutely.
great. Thank you for the clarification. Sajal, over to you.
Yeah, sure. So the other question that I wanted from you, Dr. Satya, was what's the best way to encourage innovation? Because when I see at countries like UK and the US, innovation is a sort of a triangle. So you have academia, the universities on one side, you have got pharmaceutical companies and life sciences companies, but you also have got support from government and philanthropic funding. My perception is, right or wrong, that this ecosystem is kind of not there in India, or it needs to be developed further to then foster a greater degree of innovation. China is kind of ahead of India, in at least on the biologic side, because if you look at a player like Wuxi AppTech, they have close to 6,000 customers in total, and 80% of those are Chinese. So they've got a big domestic market, which gives them a lot of opportunity of growth. Whereas majority of Indian companies, by and large, whether it's yourself or Syngene or Newland Labs or whosoever, their prime market is the exports, predominantly in the US, also Japan and Europe. The home market is not there today. Can that change? How do you see that?
I'm hopeful the situation will change. The reason I'm saying is not just companies, but the country is also moving into Amrutkal, as the country is saying. We're moving from scarcity to abundance. When we imagine from 3-4 trillion, we become a 25-26 trillion dollar by 2047. That means you multiply everything by maybe 8-9, what is today. Then the academia, industry, government priorities will align. Today, government priority is to build a road, build infrastructure. Companies' priorities is to make company more sustainable, float on the waters. Universities' priorities is to increase the strength, recruit more students. Right now, all these three have different priorities. I'm sure a decade from now, priorities will align because we are moving to on the brighter side of the economy. I think I'm not finding fault with any of these. Everybody's practice is different, right? But in the course of say 10-15 years, government will have enough money to create centers of excellence. Companies will have enough money to sponsor a $100 million grant to alma mater, like in US. Whereas universities are filled with money like Harvard, billions of dollars endowment funds. We are not there right now. Universities suffer from ill infrastructure, less faculty. Those have to change. And then companies have to move away from how I fund my capex next quarter to said how I spend my money very wisely. And government also will think differently when they say they have enough money to deploy in basic sciences. Today, I think that situation is not there. I think we are moving in the positive direction. One good example is we invested in IIT startup. They are into CAR-T technology. When we invested, they were in phase 1. They are into phase 2 now. So that is a good example. So where the academia and industry collaborating to take a cutting-edge technology to the masses. The CAR-T is not a generic molecule. CAR-T is the new discovery, and we are part of that. So that these kind of examples you will see more and more in the coming years.
Absolutely. And cell and gene therapy, there is enough evidence to suggest that that's the fastest growing. Multifold growth is expected over the next decade in the cell and gene therapy area, and CAR-T being one of those. So yeah, definitely, I definitely agree with you on that, Dr. Satya. The few things that I would like to clarify: there are many attributes or qualities that a CDMO player requires to be able to competing with the best. So companies like, so if I take Europe as an example, there is Polypeptide, there is Bachem, there is Euro API, the spin-off from Sanofi. They're great quality players. And Wuxi, of course, in China. I mean, what according to you are those 2-3 attributes where you think that Indian companies in general, not just for Laurus Labs, Indian companies in general have what it takes to compete with the best of these breeds players and not just compete, I mean win against them?
The one is sustainability. So when they want to put their asset into a company, they want to put into a company where it will float for next 20 years. Because they put a phase 1 and it will take 10 years and then they will have a 15 years runway for commercial sales. So they want to work with the companies with sustainability, with high corporate governance, with high respect to environment. So that ESG will play a significant role to choose partners in the coming years. Why the brand companies, their costs of material wise is maybe single digit percentage. Maybe take plus or minus 2, 3, or 5. So that is the kind of cost. So for them, if I'm in the position, I will see how to protect my 90% of profit, 95% gross margin, rather than save 10% or 5%. If I take a risky call on putting the asset into a weak player for reducing cost from 5 to 4.5, I may risk 95%. So the generic is different. They're okay to take risk. When they reduce costs from 40 to 50, they take risk because that is, they save significant resources there. So I think the CDMO, you have to be on regulatory track record success around the clock, and you need to embrace new technologies because the demands for these clinical programs are new technologies. That means you are able to invest more. So if you are not able to, or you are not willing to invest in new technologies and create new capacities, I think it's not easy to attract CDMO. And second, you need to have large. See, why companies you mentioned are big? They have huge capacity to deploy. They have huge scientists to deploy. Suppose a CDMO partner comes and says, give me 200 scientists. I have a very interesting project, give me 200 scientists. Give me 500 reactors. We don't have that kind of capabilities. I don't know how many companies can give 200 scientists in 1 week. How many companies can give 200 reactors in 1 week? We are not in that. We are still living in a scarcity right now. Yeah. So, but to attract big projects, big customers, we need to move away from, I said, no, I have 100 reactors free. Give me project. I can deploy 100 scientists tomorrow. Give me projects. I think when the companies move to that stage, we attract more business. Maybe I'm seeing people are moving to the direction. Absolutely. So like you mentioned, see the chances of big guys winning big projects is brighter here, CDMO space.
Yeah. What I've seen, sorry, Neeraj, very quick clarification. This is a scale business. Economies of scale matter a lot. And I've seen with Wuxi and others that the bigger you grow, the faster is your growth rate.
Yes.
Which is counterintuitive because your circumference keeps growing and your touch points with the innovators, they expand and you win more business.
Yeah. No, you are absolutely right. Today, our CDMO project managers, they are worried. Are there any new projects coming? They're not worried lack of projects. They're worried more projects.
Got it. Dr. Chava, since we are off time, still, unless you have more questions,
no,
one final question for Dr. Chava because we are running slightly short of time. Dr. Chava, so thank you for all those insights. I would just love to understand that because this is a multi-year opportunity of sorts, Sajal may be able to grasp almost everything that happens in this space every second day. A lot of investors might not be. And therefore, I would love to understand from you. I would urge you to wear an investor's hat and tell us what are the cues, what are the pointers that people should look at when they are analyzing what a company in this space is doing. Where is it that it is actually winning? And where is it that it might not be winning? Because people may not often even understand the significance of a development that happens because they don't quite know how to analyze this. Can you help us with that?
10 years back, when we talk about 1.3 billion people in India, people think differently. I said, so many people. Now we say demographic dividend now. We're saying people in India have the strength now. It's not weakness anymore. Similarly, pharma industry, I said, I have 30% capacity free. I think some investors will appreciate, some investors will say, why these five guys are building more capacity. So now, ability to invest ahead of the time will determine the success of companies in the CDMO space. I think I will put that. If you are averse to investments, I think your chances of growing is less.
Well, we hope, Dr. Chava, that you keep investing, keep growing, and keep on making some exciting things out of India. Thank you so much. Much appreciated joining us as much as you are in a silent period. Thankfully, we didn't talk numbers, so there is no issue.
Good. That's all. Absolutely.
And I look forward to talking to you, Dr. Chava, once the Q4 numbers are out.
End of this month. Sure. Thanks, Neeraj.
Thank you, Dr. Chava. Thanks for joining in.
Thank you.
Thank you.
Thank you.
Thank you.
Yeah. All right. Well, that's the view from Dr. Satyanarayan Chava, and some views, of course, from Sajal as well while he was questioning Dr. Chava. Now, Sajal, I would love to understand from you now. You obviously know some of these answers. You preempted some of these answers as well. Maybe you learned something out of this conversation. The issue that people might have with companies, not just Laurus, but some of the others, is that there is a fair degree of volatility in what is perceived by the market or guided by the company and what is eventually delivered. And there could be various reasons. How would you classify these opportunities as structural opportunities, or could these be cyclical? I asked the same question to Dr. Chava. I'm asking this to you.
Yeah. So innovator synthesis is structural, but majority of Indian companies are not pure play innovator synthesis. Majority of them. So they have got the cyclical elements embedded, and you get the sum of parts. The listed entity is the sum of parts. It has got both generic elements and formulations, ANDAs, and the innovator synthesis. So the cyclicality that you find in the earnings is coming from the generic side. And because the listed entity is a consolidated, the sum of parts, you get to accept both with equanimity. You can't say that I'll only have innovator side of the story and I don't want to. I mean, if you get a demerger, if you get a pure play listed innovator synthesis, then by all means you take care of the cyclicality. But the challenges there are slightly different. The molecule will fail. Most of the molecules will fail, but new molecules will keep coming in your pipeline. Only when the molecule enters phase 3 or the development or the commercial, you get the sustainability and the predictability in the numbers. And I've been tracking the segmental numbers of some of these players, and there are companies that have grown in the last. So I'm talking about last 10 years, 10x to 20x. Starting with a low base, but then the growth rate doesn't change much, because as you grow bigger, your circumference of touch points with the innovators, and even on the innovator side, the CXO, they keep moving, and they carry that memory. It's the word of mouth. So, I was working with one company. Now I've started my own sort of virtual biotech. I need someone to support my drug discovery life cycle. But I know there's a player because I've worked with them before. So you carry that sort of memory with you. So you need to win the heart and the mind space. But the honest answer to your question is there will be cyclicality in cases where the listed entity is not a pure play as far as the innovator side is concerned, because generic business by definition will be cyclical.
Got it.
Okay. Will be.
Okay. Last two questions. One opportunity size, one a soft question. So the opportunity size first. Now, you obviously mentioned about some global players which are very large in size. And you also mentioned that the larger these companies become, the better the growth rates become. Now, my question to you is, from the Indian landscape, whether it's a Laurus or a Newland or X or Y or Z, do you foresee the possibility of any of these companies to possibly become that large a few years out? It's a difficult question. You may very well go wrong, but I'm still trying to understand.
Not in the few years. You got to have the right sort of horizon. So as I see, these companies are doing path breaking research. It's not easy to take a difficult molecule in phase 2, which the US partner was struggling, to then scale it up at 60x the size of the phase 2 in a single batch and get it over the line commercial. It's not easy. So there will be very, very few players, but everything is a function of time. Warren is rich today because he has compounded for 8 decades, 7 decades.
Yeah.
Nothing happens in a jiffy. So next few years, no. Over the couple of decades, possibly we could have, 1, 2, 3 large players coming out of India. I'm realistic, reasonably positive, and that's the reason, this is my single biggest weight in my investment. So I'm invested in hospitals as well, but the innovator side of the basket is much bigger, and the reason is that I'm playing that game of 10-year plus, because good things will take time.
Got it. My final question, and a soft one, which you asked Dr. Chava as well, because you understand this space so well. How important is it that, for example, a key component of your success, which is scientists, are probably preferring to be in the CDMO space, and the fact that India is a hotbed of, kind of coming out with scientists who are talented enough? We've heard that several times from companies like Syngene talking about the same as well. How important is this soft aspect for the success of some of these companies?
Absolutely. I think that's the single biggest determinant criteria. So you need to have scientific talent, but the scientist should also have emotional intelligence to withstand the uncertainty which comes as part of doing this synthesis business. And they have to understand that the research that they are doing may fail tomorrow, or this may be the next blockbuster that they are currently piloting in the lab. The future is unpredictable. So you need to have that emotional intelligence to accept the fact that it could go either way. And if it fails, it fails, as long as it's not your fault when it comes to the compliance and the data integrity side of things. There is one large company, I won't name them, in Hyderabad region. It's a CRO where data integrity issues were highlighted by EMA, the European regulator, 2015. So if you Google, you will find it, and I'm happy to discuss more offline about that player. So data integrity is, and who is generating that data is your scientists. So a lot depends on the capability, the ethics, etc. of that person. Absolutely.
Got it. Sajal, this was lovely. Thank you so much for taking the time out. It was a maiden conversation with us at BQ Prime. So thank you for that. And look forward to actually talking more to you for the benefit of a bunch of people who learn enough from you on Twitter, yes, but it would be good to do it here as well.
Thank you, Neeraj, for those kind words. And I think I enjoyed the interaction more than anything. So thank you for giving me this opportunity.
And the pleasure was ours. And viewers, thanks for tuning in to yet another episode of Insight.